All right, everybody. Winston Davis here with Move Up Consulting, and I'm extremely stoked to be able to introduce Van Menard with Insight Risk Management. And I'm stoked. I've been putting together notes all week on doing a little spiel with these guys. And what we're going to cover are a lot of the questions that most of you are asking and that you're trying to figure out as either a new company owner or your business is growing so quickly that you're like, oh my goodness, like there's so many things that we don't know because maybe you didn't go get an MBA or maybe you don't have all that business background. So we're going to cover some of the insurance risk management parts of owning a moving company. What do you need to have? And I'm going to let Van really cover in the nuts and bolts. But just to let you know who you're hearing from, Van is a principal broker with Insight Risk Management. He's got a background in education at UPenn doing finance, and then also at Duke, which I'm happy with that because I'm a Duke basketball fan. So I'm going to turn them over to you. And Van, just share a little bit about what you do, and we'll jump right in. Okay.
Thanks, Winston. I appreciate it. We're an independent agent or a broker. What we do is we try and help our clients represent them to the overall insurance marketplace. Obviously, nobody likes paying more than they have to from an insurance standpoint. And so cost is certainly something that we work really hard at. But equally important, we really want to make sure our customers are covered properly. With any of our household moving accounts, it's a very different business than a lot of the other businesses out there. It's highly regulated. There are filings that have to be made. And there's a very small universe of insurance companies that are excited about writing household movers. And so as a result, it's a real niche that we've developed. And I happen to be part of the team here that specializes in that. It's part of our practice group. And so to that end, I'm glad you're putting this together. It's a great idea because we get a lot of these questions from our clients. And so hopefully we can put together something here in the next 15, 20, 30 minutes together that people will find helpful. And if they have any other questions afterwards, I'm sure they can reach out to you, Winston, because there's no way we can cover it all here in our short time.
Right. Yeah, absolutely. And my recommendation always is to get with someone that's a specialist, right? Get with someone that has industry knowledge, because this is a vast ocean when it comes to this information. I mean, these guys, even they'll tell you that sometimes they've got to probably go hit the books a little bit on some of these things. So, so let's just jump right in, and we're going to do this kind of like a conversation. So everybody on here can really be engaged. So if someone's getting started in the moving business, household goods, transportation, what are the coverages that they're going to need to get so that way they're protected?
That's a great question, Winston, and we get this a lot. And a lot of it's going to depend on where are they in their stage of putting together their business. Sometimes we see folks that are just doing it on the weekends, for example. And so the key coverages you need to be aware of are kind of fall into 4 buckets. And I can't give you exact timelines as when to buy it, but there are certainly triggers on when it makes sense to buy the coverage. The first is going to be the auto insurance. If you are one of these guys that's doing it on the weekends, you're not using trucks a whole lot, you can sometimes get the auto insurance from whoever you're renting the truck from. The auto insurance is going to be fairly expensive. It's going to be a ballpark figure for somebody who's just getting started, $10,000 per truck per year. And because it's quite expensive, you're usually going to want to buy that from whoever you're renting the truck from. Because a lot of my movers get started where they are renting the trucks to get started. They aren't actually buying the equipment.
Right.
And then eventually they get the utilization up to the point where it makes sense to buy the truck versus rent it. So the auto insurance is the first piece that we always talk about. Mm-hmm. The next piece that we talk about is the cargo insurance. The cargo insurance actually covers the stuff that's being moved in case something happens to it. That could be a truck tipping over. I've had trucks get stolen, or the goods get stolen out of the back of trucks. And of course, you get the little bumps and scrapes and damage that just happens to be part of the overall business that ends up happening. And then the next 2 coverages is something we call general liability. That's if you end up hurting somebody or doing damage to somebody during the move that does not involve the loading and unloading. It fits with the auto coverage to cover the times that maybe the auto coverage is not going to cover those kinds of things. And then the final piece that people forget about sometimes, but it's very, very important, is workers' compensation. Workers' comp is very important. And the reason why I'm highlighting those coverages is because for the auto, you're going to have to do your filings. And the filings that you do are going to end up going with the auto insurance. And then each state is going to have very different laws when it comes to workers' comp and what you end up, what are the triggers for purchasing workers' comp. Usually it's number of employees, but it's state by state. So you need to learn the details in your state. And then of course the cargo and the general liability, I think, are fairly straightforward. And
Right.
that's kind of what I would call our starter package.
Right, right. Now, side question here, Van, when someone has cargo insurance, correct me if I'm wrong, but that's just covering those goods while they're in transport, right? Just from point A.
That's 100% right. It'd be all
Not
of
while
the
they're moving them
goods.
into home.
It's why you're loading them onto the truck. It's when you deliver them. It'd be anything that happens to those customer goods. And we get all sorts of crazy claims. It could be the truck gets in an accident.
Right.
And so all of the goods end up being destroyed in the accident. It could be just a rip in a couch that somehow or another it happened, or breakage that ends up happening. And
Right.
so we'll get to this later, I'm sure, in our conversation. But all of that ends up dovetailing with your bill of lading, and it goes hand in hand with the valuation that comes along with your typical move.
Right. Totally. So now you already kind of mentioned, there's not quite an order per se. I mean, there's these triggers as your company grows, as you mature as a business. And there's those points when you need to add these coverages. Now, what would you say for coverage amounts? Because there's state minimums right now. If, somebody in Virginia versus somebody in Tennessee, you need to check your state laws and all these different things when you're looking at these situations.
That's a really good point. Usually household good movers are going to buy at least $750,000 on the auto, because that's what's required from a state filing standpoint. Mm-hmm. And so 750 is usually going to be the limit on the auto liability piece. Mm-hmm. For the auto physical damage and collision, that's damage that happens to the truck itself. You as the owner can decide how much you want to carry to some degree based on what you think that truck is worth. Then we end up having the workers' compensation that we talked about. Again, just like the auto at 750, it's going to be a state mandated kind of a coverage. And so if you buy workers' comp, you're automatically getting whatever the state requirements are. The workers' comp policy will cover whatever the state says it has to cover. The other pieces then are the general liability. It gets sold in $1 million increments. So you start off with $1 million policy. And then the final piece is the cargo. And that's a much more difficult number to pick, because ultimately the cargo needs to be a number that's satisfactory to cover your liability as a mover for the other people's stuff. But usually when people are getting started, we see that number somewhere around $50,000, maybe $100,000 when they get started.
Yeah. And Van, I think this stuff's so valuable for folks, especially because some people they're looking through the eyeglass, figuring out, okay, is this business going to be a good business for me? And then there's the folks that just got started, or people a couple years down the road, and these are questions floating around in people's minds. What about umbrella coverage? Because some people throw that around. What about that?
That's a great question. Also, let me make sure we're all clear on what umbrella coverage covers or what it does. An umbrella coverage just provides additional limits on top of your workers' comp, additional limits on top of your auto liability, and additional limits on top of your general liability. So it's not actually providing you usually any other coverage than what you're already purchasing, but instead it just gives you more limits in case a catastrophic type event happens. So we usually see what more mature companies are carrying 10 plus trucks buying an umbrella coverage. And really your key exposure there, what you're really covering as much as anything, is your additional liability for the trucks on the road. We continue to see more what we call nuclear verdicts. These are very large verdicts that come down from juries for auto liability claims. So really an umbrella is there for a larger, more mature business that has more to lose because they've built up a very large, successful business buying that, 10 plus trucks.
Right. Just more assets in the business that stock.
That's exactly.
Yeah. So now because this is the big question that a lot of folks have. They they, go through an agent or a broker and they get a quote and they look at these premiums and it's like,
They're shocking, aren't they?
and you're running a business that, is there's certain margins that you got to have. And you throw in some of these insurance premiums and it's like, man, how does this work? So what would you say? I mean, how does someone know if they're getting a fair rate? Is there a way to know, or is there a recommendation on just a process these owners should be using?
That's always a tough question to understand, where we feel like you're at the mercy almost of these insurance carriers. And so to that end, I would say there are a couple of things. Number one, when you first get started, that should be the most expensive insurance policies you ever pay for. Once you establish a track record and you're showing you're a good account, and a good account from an insurance company perspective is an account that's profitable, where you're unfortunately paying a lot of money to the insurance company and they're not paying out a lot of claims.
Right.
Well, if you can demonstrate that to the insurance company over time, then you should see your premium rates go down. So when you're first getting started, there are very few companies that will write you, and they're very expensive. But over time, as you get more experience and you show yourself to be profitable, you're going to have more and more insurance companies that end up fighting for your business. And so what I would say is the best thing you can do is find a broker who specializes in this space and start a very good communication with them, so that way you understand how is your account being presented to the overall marketplace. What's the feedback the accounts are giving you about your account? And then making sure you stay on top of your losses, so you understand what's your overall profitability look like to the insurance company. And so if you can have that good communication with the agent, but they're able to communicate how you're a best-in-class enterprise to the insurance market and all the good things you're doing to be safe. And then the agent can communicate to you what's the feedback they're getting from the marketplace. Who are the insurance companies that they approach? You should get a lot of comfort then through that process that what you're seeing is truly the best that's out there in the market. Because as an agent, I'm going to try and bring a lot of pricing back to my customers so they can see what's available in the overall marketplace and feel good about the decision that we're making with them.
Right. Totally. And I think at the end of the day, it's working with a specialist for a lot of these moving companies. It's, can you work with someone that's a generalist that can, go out and write you a policy, but they do a lot of other things? You can, absolutely. And you can work with good people, but we're at Move Up Consulting, we're recommending get with someone that specializes, that's already has accounts with other moving companies, because they're going to understand your situation much better.
Winston, I think that's particularly important too as you grow and you get more experience, because at the very beginning when you're getting started, you'll probably go with Progressive, for example. Everybody has Progressive, but
Right.
After a year or two, a good agent that specializes in this is going to have other options for you.
Yeah.
And so another agent that doesn't necessarily specialize in the space may not have anything except that high expensive company to get started with. But a specialist is going to have some real insurance companies that specialize in that space that the average broker is just not going to have.
Yeah. In my experience, Van, I'm sure you probably agree with this. It's just one of those things that as an owner, you should always kind of be shopping this. This is something that you don't just probably get one time when you get started and then you just never think about it again. It's something you reevaluate every time your renewals come up, and, hey, what's the numbers looking like? And I'm sure, you would agree here. After you can get past that first 2-3 years, that's when things start kind of feeling like the pressure comes off. Am I right?
Absolutely. We'll see declines as much as 50% after 2 years. If it's been a good account, it's profitable, the drivers look good, the safety protocols are in place. And that's where I think you can bring a lot of value to the table, Winston. We see a lot of moving companies that are great movers, but they haven't gotten the paperwork done maybe. And so as a result, an underwriter sitting up in an office doesn't have any real way to understand the quality of their operation. So getting all this paperwork put together, whether it's driver's handbooks, safety manuals, and making sure you have your MVRs and DOT files together, so that when you go and present, you allow me, and when I take your account to the underwriter, it looks like it's a very well put together account. And a lot of my clients aren't very good at that necessarily themselves because they haven't done it over and over and over again.
Yep.
But I think that somebody like you who really understands that can help pull that together and in the long run save them a lot of money.
Yeah, yeah. Now let's shift gears here. Let's talk about someone that, let's say they don't own any trucks. They're just purely renting, and they're needing to get cargo insurance. Are they able to get that, or do you have to own a truck? What's that situation like?
Absolutely, we can help those people out. That's not a problem. As again, not everybody can jump into the deep end of the pool and buy a truck and pay for workers' comp and hire all these people.
Mm-hmm.
Instead, it usually is a more gradual process. And so, as we discussed right at the beginning, the cargo is going to be one of the very first coverages that they'll buy on their own, because if they're renting a truck, they're probably going to buy that from the rental company, whoever they're renting the truck from.
Right. And I think the next thing I was going to cover, I think you've already spoke about it, but the next piece of coverage, your commercial auto, in that case, if you're renting trucks, you don't have your own. So you recommend, Van, that you would just go through generally that company, the rental company, right? Whatever they offer.
That's right. When you're just getting started, there's no insurance company that's going to do a good job or help you with writing your insurance until you actually own the truck yourself. And insurance companies aren't very good at insuring what I call a virtual fleet, where you just rent trucks as you need it. But what will happen a lot of times, again, we get back to this triggers. One of the triggers that a lot of my clients end up buying coverage is when they need filings. And so if you need to get filings, once you start doing filings, then you're going to need an insurance company to write the insurance on your trucks. And at that point, you're not going to be able to rely any longer on the rental truck company's insurance.
Yeah. Now let's talk about the differences between our long distance movers and our local movers when it comes to the commercial auto. What's the key differences between there? Because we have probably about 3 categories of companies. We've got companies that maybe specialize just in long distance, companies that specialize just in local, and then there's a lot of folks that do both, because both can be profitable set up properly. So what's the recommendation there? What's the advice with your commercial auto in that comparison?
Anytime you end up going across state lines, there's more and more regulation that comes with that. So you're going to have to follow that greater regulation. IFTAs can be filed by a lot of our folks that go across state lines, the fuel taxes. You do end up having to register with the Department of Transportation and making sure your filings, we're back to the filings that end up having to happen when you go across state lines. So there are fewer carriers that will write folks that go across state lines and go long distance. And as you alluded to, the distance, how far are you going, makes a huge difference. If you're just going from North Carolina to South Carolina, you are going across state lines. You will have to follow a lot of the regulations. But from an insurance standpoint, there's still a lot of companies that may write you. But as you go further and further and further, there are fewer and fewer companies that end up writing the coverage. And that can make pricing more challenging. So it is important to realize that when you go across state lines and become a long haul trucker, as the way we look at it,
right,
versus just a local folks that maybe are going within 50, 100 miles of their base of operations. It's a totally different world sometimes from insurance.
Yeah. And what I think a lot of folks, sometimes they kind of forget is when you think of insurance, you really think you're talking about risk. Okay. And what I want if you're listening as an owner, think of it as risk. And if you're going way, way far out, hundreds, a couple thousand miles away across the country, well, that's higher risk. So it's more risk to that carrier if they're going to write you a policy and all these factors. So
you rarely use a 26-foot box truck. A lot of times you're now using 18-wheelers. And so you're absolutely right, Winston. It looks very different to insurance.
Now, what about if is there ways to get different levels of coverage with your commercial auto? Like, is there something that you can just get a base, like just get the minimum for just maybe a liability purposes or full coverage? What's that outlook?
Good question. The auto insurance is going to have really 2 pieces to it. One is the liability piece, and the liability is going to be mandated by the state and by the federal government as well through the through legislation. And so that number is that $750,000 number I threw out. So unlike personal auto policies where you may have, in Tennessee, it's a $25,000. That's Arkansas, it's a very low number. When you start getting moving companies, they're going to demand that you carry a much higher number, 750,000. So there's not a lot of wiggle room there from that standpoint. But then you have the other side of the coin is the physical damage. That is the collision in case you get in an accident, the actual damage to your truck. That piece, you have a little more flexibility. Do you not want to cover it? You don't have to cover it if you don't want to. It's completely optional. If you have an old truck, maybe isn't worth much. A lot of my clients don't insure those. The same token, a brand new truck, you're going to want to make sure that's proper insurance. And then we can look at some options like higher deductibles and so forth to try and make the premium a little more within your budget. So there is a little more flexibility there on what we call the physical damage side.
Okay. Now, when in the commercial auto is the reason we're talking about this one probably a little bit more than the others is it tends to be the one that it costs more, right? It's one that gets these owners and the movers out there it's the one that's kind of smacks them in the face a little. So
it'll take your breath away. Absolutely. Especially when you're first getting started.
Yeah, absolutely. So are there any tips or strategies on ways that some of these newer guys breaking in can lower these premiums? They can make it more manageable. Any tips on that?
The more you can understand about how insurance companies look at your account, the better you are, and the more you can pull those levers to help you lower your premium. Some of the biggest things that we're going to see the insurance companies use for determining their pricing, number one is going to be credit. Credit is everything. And so we really have to work hard at finding your credit or an owner who has good credit and using them. That can make all the difference in the world from a pricing standpoint. The other is drivers. Making sure you have clean, what we call motor vehicle records, MVRs, makes all the difference in the world. It can literally triple your premium if you have points on your license compared to somebody who has a clean MVR. And recognizing it's not just the incidents that you have while you're driving that truck, but it's on the weekends also. So anytime you're driving and you get points on your license, that's going to affect your insurance premium. And then we look at the drivers that you end up hiring. Having good driver controls and only hiring drivers with clean driver's license end up being very important for driving your premiums lower. I do get a lot of pushback from my clients on that. They say, Van, if I have to only hire clean licenses, it's hard for me to hire anybody.
Right.
Those people are hard to find. But I would say the money you invest in good drivers is going to pay off many times on the back end in terms of insurance savings and just headaches, lack of headaches, so that you can focus on your business, focus on getting those moves complete.
Yeah, and I would agree because that and one thing to look at is that's partly a litmus test on some of the other characteristics of how that employee is going to perform. You know, if you bring someone across the table and they have all these marks, well, you know, that might be a red flag, right? So let's peel off from the commercial auto and let's talk a little bit about differences between some verbiage here. We've got insurance and then we've got valuation coverage when it comes to a client's goods and items. Okay. So what's the difference there? And the main thing that we want to know for our owners is how do the owners properly communicate this to their clients? Because that's who's probably not understanding valuation coverage is the customer, and it's their items that are getting moved. So what's that key difference there?
Great. So as a moving company, you're not allowed to sell insurance because you're not an insurance agent. And so something called valuation has been created. It doesn't exist anywhere else that I know of. And basically what valuation is protecting, I can't use the word insuring, but instead we'll use the word protecting the goods of the customer that you're moving. And ultimately, you, the mover, then are responsible for those goods. Your liability that you owe to that customer is spelled out in legislation. And then the cargo insurance that I sell you ends up being the way that you protect yourself or you fulfill those promises that you're making to your customer about what you're going to do if their goods get damaged in transit. And so I may be saying, the obvious here, but with valuation, there are a couple of different ways to do it. The first way is what we call full value. Now, the way that it all works is by per pound. So what I would suggest is making sure that it all starts off in two places, explaining it to the customer. Because if the customer understands at the front end, they're not going to have problems on the back end if something happens. That's number one, is the sales process. Your sales guys can't glance over this. When you go and do your estimate and so forth, it's important that you start explaining it to the customer then. And then likewise, this is why we say it's so important to use a bill of lading. Matter of fact, a lot of my insurance companies will demand to see the bill of lading that's being used at all moves, and have the insured or the moving company represent that they use that for all of their moves. And so the bill of lading will very clearly lay out liability of the mover. And so it's there to protect both the client who's having their household goods moved, and say, look, you've got this protection on valuation, and also to protect the moving company, because with a full value protection, it limits your liability at $100 a pound. And then there's something called released value, which is a lesser amount, which is only 60 cents a pound. So if you have a 100-pound stereo system, it may cost thousands and thousands of dollars. The most you're on the hook for that is going to end up being $60 as the moving company. But that's only going to work if you have this bill of lading put in place correctly to help limit. Because if you don't have the released value on the bill of lading, then it automatically defaults. So there's the assumption that it's a full value protection, just $100.
Right.
So working hand in hand with those to understand that valuation is a way to protect the customer's goods. When used properly, not only does it protect the customer's goods, it also protects the mover from unrealistic expectations by establishing this $100 60-cent protection. The other thing that is difficult is not just rely on valuation insurance and also on valuation, but instead recommend clients go insure their stuff with either their homeowner's insurance, or you can even go online and buy homeowner's insurance. So making sure that the customer has a very clear expectation on the front end, has been communicated on the front end, to solve a lot of problems on that.
Yeah.
Insurance.
Okay. Very good. Very good. And that's the area that I think you mentioned about, as you know, companies, estimators and sales reps, they absolutely inside and out need to understand how to explain this, one, how to offer it, and it should be offered every single estimate, every customer. One thing that also has been mentioned is bailees, right? Bailee customer insurance. What is that? Because that's something that I think a lot of folks aren't familiar with. Is that an option for people?
That is a insurance term. A lot of times it gets thrown around. A bailee is somebody who has somebody else's stuff in their possession.
Right.
And so that that bailee's protection, is what cargo insurance is. So cargo insurance protects somebody's goods, but it's in your care, custody, and control. So when we start talking about what are the essential coverages, in auto, cargo, general liability, and workers' comp, that cargo piece is synonymous with the bailee space. Bailee is a little bit broader. You can think of a bailee as being anybody from a car mechanic who's working on somebody else's car, so that car in their possession, or a dry cleaner who's got somebody else's goods that they're cleaning. And so a bailee is a very broad term. And
Okay.
so we narrow it down to just cargo insurance.
Right. Very good. Very good. Now, let's say there's an instance where you have a company owner and they have a policy, their carrier drops them for whatever reason. What should an owner do if they get dropped by a carrier?
Well, the first thing, hopefully they're working with an agent that has a lot of different companies, because that's one of the reasons that we as specialists in the industry represent a lot of different is in case something happens. These insurance companies can be very finicky. But the next thing that you as an owner need to really do is make sure you understand why. You really need to get to the bottom of it. Is it your drivers? Is it your loss experience? Is it something specific to that company? Because if you understand, the more you can understand about how the insurance companies are doing you and your account, the more you can work to improve your overall presentation to those insurance companies, and thereby get your premiums lower. So the best things that you can do is, number one, if you're working with a company such as ours that represents virtually the entire marketplace for moving and storage accounts, you're not going to have a big problem finding other coverage. Now, depending on why you're being dropped, it could be very expensive. Again, these insurance companies are in this business to make money. So if there's something unique about you that has happened, where either you've had a lot of accidents or you've hired some drivers that maybe have a lot of points, or if there's something else that maybe if you haven't paid on time, you need to understand what has happened so that you can take some corrective action. But I will say, if you're getting dropped also, you really need to do your homework to make sure you understand what's going to happen to your insurance pricing going forward, because you need to be sure to build that pricing into your overall business plan.
Right, absolutely. And there's something that they reference, and correct me if I'm wrong, but something called an insurance score, correct? That's something that I believe they use in your terminology. What is that, and is there a way to improve that?
That is a way of these insurance companies to try and distill a lot of this information down to one or two key metrics. And so we've touched on a lot of the inputs that go into that score already, and you're being much more specific now about why I've hit on these. But number one is credit. Your credit is very, very important, and making sure you have good, strong credit. And so that is a huge component of this overall insurance score. The other is going to be, what is your loss experience been? Has it been good? Has it been poor? And then finally, have there been what I'll call near misses, such as speeding tickets, such as accidents maybe you've been in, even though they weren't claims on your business, they still were incidents that are on your license. So a lot of this stuff we've been talking about gets fed directly into that insurance score, and then that will drive your overall premium.
Good. And now let's jump to the workers' comp part of the equation. And, a lot of folks, especially in moving, you will hear people say, oh, well, I'm just going to 1099 my people. And I don't know that everyone understands, when that is appropriate and when it's not, because you can 1099 subcontractors, but there are a lot of companies that technically they have W-2 employees that are working for them. So there's some criteria out there, right? There's some things that consider whether a person is 1099, meaning they're in control of their work, or their W-2. So what's that, and how does that float with workers' comp?
So that's a point that a lot of folks don't always understand, our clients at least. A concept of W-2 and 1099 is a tax concept. The IRS has developed that. Workers' comp doesn't necessarily follow those rules. And so therefore, you need to understand what the workers' comp laws are in your state. It's different state by state. But in general, the criteria are not always that different. The concept is, are you controlling the method and the tools and the way that work is done? If you are, then that should be a W-2 employee, and workers' comp needs to be carried. Or is that person an independent contractor? Are they free to come and go as they want, whenever they want? Are they paid by the job rather than paid by the hour? Are they using their own tools and their own truck and their own transportation to do it all? Or are you providing all those tools? So the IRS has a list of about 5 criteria that you use, but it's a very difficult line to sometimes draw. And if you're having trouble drawing that line, the right person to talk to is generally a labor attorney. They will understand it much better. And ultimately, it's a legal question. It's a question for law. And so it shouldn't cost much. It should be pretty easy. A labor attorney who knows what they're doing should be able to ask you about 5 or 6 questions, very much along the lines of issues that we already brought up here. And then based on that, they can help you determine what you think, what they think should happen from a 1099 versus W-2. And then after you do that, if it's a W-2, you definitely need workers' comp. If it's a 1099, you may still need workers' comp because sometimes the workers' comp law, depending on the state, can be a little bit broader, a little more all-inclusive than the IRS rules, such that somebody can be deemed to be a 1099 subcontractor for tax purposes, but would be deemed to be a employee for workers' comp purposes. Workers' comp would need to be covered on them, carried on them.
Right. And that's one of the big ones. That's one of those ones that, the truth is, there's a lot of companies that are going out and they're kind of getting away maybe with some of this. And if you're one of those companies, this is the warning. This is your opportunity to really look at your company and do the things the right way, because you never know when an agency will come in, they see something wonky in your numbers and they check you out, and then you're going to owe not just the back taxes, but you're going to owe some fees, some interest. It can pile up, right? So not a fun time.
That's right. And of course, there's that regulatory component to it. But the other component that we typically see is you may have somebody who's a 1099 contractor and they get hurt, they pull their back, they hurt a knee, something like that. Well, it's amazing how they say they're 1099 when comes time to take taxes out of their paycheck. But when they get hurt, they say, no, I'm an employee. Pay me my workers' comp benefits. Yeah. And so that's and judges and people that are in charge of workers' comp don't like to see people get hurt on the job and not be covered. So a lot of times you'll have very employee or contractor friendly judges or contractor friendly system to make sure that that person who got hurt gets the medical attention that they need. And so if you do not carry workers' comp, then you are on the hook for all of that money that is used to provide the benefits as mandated by the state to that injured person.
Yeah. Now, are there any other coverages? And obviously lots of different business owners, lots of different companies in different places. You take a business that has moving and storage. They have a large warehouse facility where they have employees driving forklifts around and doing different things. So are there any other things that an owner should be looking at to add to their business?
Absolutely. As you grow and have a larger business to protect, there's a host of coverages that we need to at least discuss. Ultimately, you can buy anything you want to or not want to, as long as you're not required to buy it legally. But some of the other key coverages that we end up running into is employee theft, whether that's an employee stealing customers' goods or whether that is an employee stealing from you. It could be not necessarily somebody in a moving truck, but an accountant stealing money from your bank accounts. We've seen much more attention to employment practices events. That would be things such as sexual harassment, discrimination, wrongful termination, any letters from the EEOC that you may end up receiving. So that's another example of some of the other coverages that that as a company grows, they're going to want to consider. And of course, as my moving companies grow, they tend to buy more stuff. They'll end up having a terminal, they'll end up having an office, they'll end up having, as you pointed out, other people's stuff in the warehouse. We'd want to insure all this property that you end up owning. So the key is to be in strong communication with your insurance agent as your business changes, just like you should let your attorney know what's going on, just like you should let your accountant know what's going on. You need to let your insurance agent know what's going on so that they can have these conversations with you and make sure that they're keeping up with your business as it changes.
Yeah. And with there's so many things out there, and you know what, you never want a bad thing to happen, but they happen. And so that's the whole point of this, is that there's a reason why some of these coverages they're mandated. They're you have to have it, and things happen. And we've got two more things we're going to cover here, and then we're going to wrap up. So the biggest question I hear, I get this one all the time, and people always scratch their head at it, is why is it that their premiums are increasing even though they didn't have any claims that past year? And we've touched on a lot of these nuances, but as an owners think in dollars. They think in dollars. And so when they see their policy and I haven't had any claims, but my premiums went up. What's the reasoning there? Is there a short answer to that, or is that a much longer one?
Unfortunately, it really is case by case a lot of times. It could be the company you're with is no longer competitive, or the right company, because they've lost, not on your account, but on other accounts, they've lost a lot of money. And so they're trying to get that money back by charging higher across the board. It could be the overall insurance market is up as a whole. Insurance market goes up and down, just kind of like the stock market. And so sometimes it's cheaper, sometimes it's more expensive. It could be your credit has changed and you may not realize it. It could be that some of your drivers now have points on their driver's license that they didn't have before. So unfortunately, I don't have a magic answer for you on that.
Right.
But again, we're right back to what we started with, which was close communication with your insurance agent and understanding how does the insurance marketplace understand your account? What do they think of your account? And that way you can be sure to work on those parts of your business that are going to have a direct impact on your pricing.
Mm-hmm. Yeah. Now, for an owner, Van, what would you recommend would be a good frequency that they're talking to their broker or agent?
It really depends on how much you have going on in your business. My companies that are growing quickly, we talk all the time. They're adding trucks. They are hopefully not having too many claims, but unfortunately, claims are part of the business. And so we're on the phone a lot with our clients, talking them through some sticky situations. Do they want to just fix something themselves, or do they want to turn a claim in? That kind of thing. But at a minimum, I'm ended up usually talking to my customers 3 or 4 times a year before the renewal. And just staying on top of the business, having a good relationship with our customers is important, because we recognize that you're not sitting around thinking about insurance all day. That's my business. That's what we do. I do nothing but think about insurance. And the only time my customers are thinking about insurance all day is if they have a problem. Either they've got a problem where they're paying too much, or they've got a problem with a claim, or they got a problem with an uncovered claim. And so I don't want my customers hopefully thinking about it too much. But hopefully over time, we do end up getting a good relationship. And just as your business changes, you remember us. And so we're able to keep up with your business. And as you make decisions, we're able to help you make those decisions. Do you want to add another truck? What's that cost? Is now the time to buy workers' comp? Let's see what that costs. So there's a lot of options of business planning we end up doing with our customers as they approach their budgeting times for the year. Because ultimately, if they're not making money and successful, we can't make money and be successful. So we want to do everything we can to help them do that. Right.
And so many times, I think the stigma out there is that, oh, it's insurance people. They're out to suck you dry, get all your money. And it's not, are there bad people? You know what, the fact is there are some. But the reason I was so excited, Van, to get on here, and I want to share this with people, is because, for the audience that's listening and watching, Van and his team are good people. They truly are. I've spoken with Van a little bit, and you can tell people's character very quickly, in my belief. You can tell by their intentions, by their background, by their initiative. And, these are specialists. And so, and one thing I didn't mention, I really want to make this a point, Insight Risk Management, they're in Memphis, Tennessee. And correct me if I'm wrong, Van, you all work with people all over, right?
We're in all 50 states. We're part of the Broad Street organization, which is one of the 15 largest organizations in the country for insurance brokers. And we're happy to help people wherever they are. And, sometimes we can help you with writing your insurance, and sometimes we can't. But we want to be a resource for our clients and for the moving industry. So whether it's helping them find experts like yourself, and so they can help drive their insurance pricing down, get their books in order, maybe get them resources that they hadn't seen before. Today I was on the phone with a customer asking about bills of lading, if we could help them obtain some bills of lading. because that was a best practice they were going to start implementing. And so whatever we can do to help the overall industry, customers, we're here to do that. So please, insurance is expensive. You're going to pay a lot of money for this stuff, but see what other value we can bring to you. If you're going to pay all this money for this premiums, what else can we do to help you?
Yeah. Yeah. And that's such a good point. You know, I teach a lot of my clients, you know, the name of the game is value. And, you know, it's not always about the dollar sign. And what you just said there is what other value is on the table. And that's really what owners, you've got to be looking at is where can you get value from? And Van, why don't you share with everybody, how would someone reach out to you and your office if, you know, they saw this, they came across this video and they were interested in having a conversation with you? What would be the best way?
You know, email is always a great way because then I can get back to you 24/7. Menard at irmllc.com. But of course, Winston, if they want to reach out to you, that's a great way too, because when they reach out to you, you can talk about some of the checklist items that we've talked about, such as do they have their driver's files put together and in place? Do they have good driver criteria? Do they have their safety handbooks put in place? So that by the time when they come to me, they can say, yes, Van, I've got all that. Now help me. And so if making sure that we put together the best package possible when we go to these insurance companies can go a long way to helping make sure that we make this as painless as possible. But it's awfully expensive stuff. It really is.
Yeah. Yeah. And at the end of the day, again, the reason that we're doing this, the purpose of this is one, education. You know, we want people to understand this. We don't want people to be in the dark. We want you as an owner to know why this is important. And also it's honesty, you know, it's transparency. You know, if you're going to your agent, if you're going to your broker and not being honest with them, that's not going to be good for you. Don't do that. That is not good. And so hopefully this was valuable. I'm going to put, you know, if you're watching this in the description below, it's going to have Van's info in their office. Again, that's Insight Risk Management. All their contacts going to be below. And this should just be another tool in your toolbox as you're building your company and you're scaling and you're finding ways to separate yourself, doing it the right way, I'm a believer in that. Van, thank you so much. This has been helpful for me, you know, because there's always stuff to learn. Am I right? That's what
makes it fun. There's always so much to learn. No matter what, it'll always surprise you.
Absolutely. All right, folks, that's it. Have a great rest of the day. We will see you guys at the top and we'll see you on the next video. Peace.